Hello and welcome to Commodity Champions, your weekly dose of what's brewing in the commodity space. And I'm Manisha Gupta. Well, let's start up with the quick recap of the week that was for many of these commodities. And the crude prices clearly emerge as the champion among all. The supply disruption fears and also the Saudi Arabia purge led to the prices trading on the higher side. So whether it's on the weekly basis or the monthly basis, you have both the crude varieties, the Brent and the WTI, hitting a 27-month highs in this week. And that is how we are closing this week as well. Well, the other space that continued to took a rebound really was the gold and silver prices. It's headed for a first weekly gain in last 1 month, and we have seen the prices trade at around 3-week highs for both gold and silver. Well, the support really isn't there because of the weak global demand that we have seen come in for this space. But then again, the weakness in US dollar, uncertainty in the US tax reform regime is something that has been supportive. The metals saw a week of profit-taking, but remember, even then we are standing tall on our feet, especially for the nickel prices, which are trading at a 2-year highs, and we have clocked a good 10% of gains in last 7 trading sessions when it comes to that commodity. So good going overall in all of those commodities. But from here on, how should you be trading? What can be the trends until the year 2017 ends? To join us and to discuss all of that now in all of those commodities we are joined by Juerg Kiener, who's MD and Chief Investment Officer at Swiss Asia Capital from Singapore. We also have with us Daniel Hynes, Senior Commodity Strategist at ANZ Research from Sydney. Daniel, hi, let me come straight to you first. And what's your sense on the kind of rally that we have seen come in for the crude oil prices? Is it sustainable? Do you see further gains from here?
Yeah, no, it certainly has been a phenomenal rally, I suppose, over the past few months. And I think there's been a combination of factors behind that. Certainly, the rising, I suppose, geopolitical risks have certainly contributed to that rally in recent times. But also, I suppose, the strength and resolve around OPEC's sort of move to potentially extend production cuts really has, I suppose, emboldened the market to take a much more bullish view, particularly in 2018 around the oil market. And then at the same time, demand has certainly been better than expected. So there's been a good combination of fundamentals and those supply side issues really driving the rally over the past few months. And we think it's sustainable enough, certainly strong enough to really support prices at these current levels.
Well, we will talk about the crude oil prices in detail, but Juerg, it has been a good year actually for all the commodities. What is your sense? Where are the commodity indexes headed now?
Look, I think the whole CRB index has turned some time ago, and oil has been a laggard, is catching up with the base metals, which have been on fire for already about 9 months. I think this Middle East issue will basically go away again. So political events normally mean that you get price extension, but on the end you come back to the basic fundamental structure, which is demand supply.
Daniel, I want to come back to crude oil prices, as I mentioned, and the reports do suggest that we can go up higher further from here. The US shale output is something that, of course, seems to be curbing the markets right now. But what is your sense? Is 70 on the way?
Well, there's certainly a fairly high potential, I suppose, for prices to spike that high with these geopolitical risks really rising in recent times. But I think on a sustainable basis, it's hard to really see oil really establish itself at those types of levels for any particular length of time. In part because I think while US shale oil has certainly been slowing, at least the growth has been slowing over the past couple of months. Price is a great incentive, and I think at those types of levels we would certainly see, I suppose, a lot of those producers rethink their growth outlook, which has been certainly constrained somewhat in recent times, and potentially increase output. So I think $70 certainly achievable on a short-term basis, but I suspect it would be difficult to hold those levels for any length of time.
All right. And Juerg, what is your sense? Where do you see the crude oil prices going forward from here?
Look, I think we might go a bit higher. We might go above the 60 levels. Having said that, it's the weakest structure among all commodities, energy, probably together with coal, which is just not really having huge supply issues. But I think because global demand still stays robust, we have about 1% annual growth globally. That's probably enough to keep the price levels basically going on a sideways level from where we are, but slightly upwards biased.
One thing that, of course, made the most of news, Daniel, was the Saudi Arabia dynamics that seem to be changing. Of course, within the region, the politics, etc., seems to be really working or heating up. But what impact of that do you see coming in for crude oil prices?
Yeah, it's certainly been quite a sort of level of movement in the political space there in Saudi Arabia, and I think you know, those events over the weekend certainly have changed the dynamics over the medium term. Certainly, Mohammed bin Salman is obviously very keen to protect, I suppose, oil revenue, and I think the strategy that they've been going with over the past 9 months around you know, price support is really emboldened by these moves. In fact, I think you know, the risks are now that you know, they'll potentially tighten the markets even further than potentially required, just to de-risk, I suppose, the potential for you know, that oil revenue to decline as he tries to diversify, you know, this economy. So I certainly think you know, it both raises the probability of that production cut agreement being extended, as well as, you know, just the general geopolitical risk that it brings with it as well.
And it's not just the crude oil prices, because when you look at the industrial commodities, the industrial metals as well, that has done well. Juerg, when you talk about the demand-supply scenario, crude, of course, is a part of it, but metals, would you pick that sector as your favorite?
I think, you know, instead of looking at crude, which is still, as I said, the demand-supply balance are actually quite balanced. It's not really a huge deficit which we are experiencing, except if you're going to go to war. So if you look at the commodity space, people should actually focus on areas where the supply side is actually really, really pressured and the demand side is growing. So we're looking at all the metals which are needed in electric vehicles. So you can looking at sulfide nickel, you can look at copper, you can look at zinc, you can look at lithium space, cobalt space, particularly, which have a much better demand and supply structure going forward into 2020. So people should start focusing, picking up actually these new demand cycles which are still strapped on the supply side.
Juerg, that point is well taken, but at these elevated levels where we have seen prices gain up by 20% in last 1 month, are you still buying? Do you think it still is a buy at these levels?
No, I think if you look at lithium, I think last week I think I had 3 different people calling me for fundraising. So the market is already pretty heating up. It might have a bit further to go, but I would look at that to consolidate. Lithium will be a longer-term great story, but it's been running really, really very hard this year. So that's why we start looking at laggards, areas which are really needed in various different parts. And I think if you look at the batteries level, if you look at sulfide nickel, if you look at copper, you look at silver, you look at cobalt required in that environment, the bottlenecks are there. Hardly anybody is playing it because the market is really, really difficult to play. So it's as well a technology issue. It's not anymore a metal issue, because even if you have let's say lithium, it's not the issue that you have lithium. The question is what type of lithium do you have, what type of batteries you're going to have. And so the technical advancement on that is going to be like your iPhone, where you double your capacity and you know-how every 3 years. So these things are now in rapid development with massive improvements, getting really hard to play. But because of that, the upside potential in certain niche areas are absolutely fantastic.
Well, yes, and the demand from the electrical vehicles is something that really seems to be pushing many of these metals higher. But Juerg, where do you see a major supply concern right now? Because the demand is strong, the further revenues seem to be opening. Supply, would you say, would be a major driver right now?
Look, if you actually look at the metal charts, then you actually start seeing they're all just about crossed up. They're still actually quite weak. So if you look by 2023, we're going to have roughly a 20% reduction in copper supply, but even worse on sulfide. Sulfide nickel, I think, is going to be in dire straits. We're going to have falling supply as well. If you look at silver, we already have falling supply, which has been going on dramatically. You look at the gold space where we've got dramatic supply contraction already happen. Even in China, the numbers which came out last month were horrific. So what you actually start seeing is that we have a lot of other areas where the supply side is going to become the issue, and they're getting another 40 to 80% up on prices over the next 2 years is not really being that imaginative.
All right, cobalt, lithium, nickel, copper, we hear it all, Juerg. But Daniel, what is your sense when it comes to metals? Would you agree with Juerg? It, of course, has been China on one side and the EV demand on the other side. But what metals are you picking up at these levels?
Yeah, certainly, with, I suppose, Chinese growth continuing to slow down, there's obviously been concerns over the short to medium term about where demand would come from. And I suppose, this new potential source has certainly excited investors, but it's certainly not going to come quickly. And I think markets where we need to see movement in new projects in particular to meet that demand over the longer term are the ones that are going to benefit initially. And I think nickel really stands out as one where there's a very small project pipeline at the moment which needs to be incentivised to meet that potential pick up in demand over the next decade. And I think that's why we're seeing prices really start to rise. But even with the rally we've seen, which is 20-odd% over the past month, they're still not high enough to really incentivise new projects. So I do suspect there's still plenty of upside to the nickel price in particular, we think, due to this electric vehicle revolution.
Well, yes, electric vehicle is the buzzword that has driven the metal prices on the higher side. But Juerg, while we have spoken about the base metals and the ferrous metals as well, would you say it is the minor metals which perhaps would have a better chance of running up even from here?
I think what I'm looking at is the whole electric vehicle technology environment and the metals needed in that. So you might not necessarily want to have palladium and platinum, because if you don't really need any more exhaust issues, then actually you might look at other areas. Even if the demand-supply environment at present in there is quite good. But if you take a medium-term investment view, which is basically 2 to 3 years, you certainly want to play this game. And so you're going to have to start looking at cobalt. You have to basically just pick it up. It doesn't matter what the prices are. Supply is really, really hard. And if you look at miners who are actually in geopolitical good jurisdictions, which are acceptable for end users to deal with, they're actually very limited. The same is actually true with hard rock lithium. If you look at hard rock lithium, which has a very low cost structure and can compete with the brain, you actually see that there are actually just a couple of places you can actually look. And if you look at the technology angle on batteries, you basically have about 2 or 3 companies which are heavily involved in that, on the lithium space itself. And you have about 2 or 3 end users which are ahead in the game, which are probably going to make up the future market. So there are actually very few names you can park your money and play a secular uptrend.
We heard that, Juerg. So it's cobalt, lithium, nickel, copper, the 4 metals coming in from our experts where you can put money in. Well, we have spoken about the industrial metals, but what about the precious metals? We will discuss that after this very short break. We also have an exclusive conversation with Commerce Minister Suresh Prabhu on the steps taken by the government to lift India's jewellery sector after this very short break.